Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
At the beginning of the new week, investors seem to be taking a cautious stance. With the opening of the U.S. market this week, the dollar is weakening. Later this week, traders will focus on U.S. inflation data. The U.S. dollar index is stable near 102.00, despite Friday's technical rejection indicating more downside ahead. The dollar index steadies near 102.50 after ending a 3-week decline, with U.S. stock index futures trading in the red. Following the labor market data, the benchmark 10-year U.S. Treasury yield stabilized above 4%, with the dollar index rising 1% in the previous week. After falling to a multi-week low of $2,017 earlier in the day, gold gathered momentum for a recovery, rising above $2,028. The benchmark 10-year U.S. Treasury yield fell below 4% in the latter half of the day, erasing most of the day's losses. In the Asian session on Monday, the U.S. dollar rebounded, but gold remained positive. U.S. non-farm payrolls were stronger than expected on Friday, boosting demand for the dollar. However, this week's inflation data will be very important. Meanwhile, the U.S. dollar index, which measures the value of the dollar against a basket of currencies used by U.S. trading partners, rebounded from its late December low to around 102.50. During the U.S. trading session on Monday, WTI oil prices fell to around $71. Saudi Arabia is offering discounts for its crude oil sales globally. The decline in oil prices is due to various factors, including price cuts by Saudi Arabia, the world's leading exporter. Additionally, increased production by the OPEC Plus is also one of the reasons for the downward pressure on oil prices. According to a Reuters survey, OPEC Plus production increased by 70,000 barrels per day in December, reaching 27.88 million barrels per day. The increase in oil production offset the production cuts being undertaken by Saudi Arabia and other OPEC Plus member countries.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment. Remember to join us tomorrow morning for the freshest news and insights.